I'm pretty sure you've got rumbly tummies and all dying to get to lunch, but I can assure you that it's going to be worth your while hanging fire and listening to this amazing panel that we've assembled here of terrific women who have deep experience in the impact space. And as both Henk and John said earlier, it's not just money that you have to bring to this market. It's thinking, but it's also heart and experience. And this panel certainly has all of that. So it's a great privilege to be amongst you. Thank you. It's also, for me, a great personal delight, actually, to see just how far we've come on the impact space. In the 80s, I was in London, and I was part of a group with Ronnie Cohen, whom some of you may know as the grandfather of impact. And in those days, these are Greenspan years, right, where everything was about growth, about profit. And when you talked about impact and social or environmental impact, there was so much sucking of air through teeth as, ooh, our fiduciary duty doesn't allow for this, and no, this is not possible. And to see where we are now, it's remarkable. It really is remarkable. And wherever you go around the world, we've got events like this happening, and it's deeply heartening. Now, I know impact has mixed approaches, and I think it might be a good idea to ask Lena, first of all, to put a framework around what we mean by impact. Now, let me just introduce Lena. As you can hear, Lena Constantinovici is not exactly an Irish name. She's Romanian, and some of you may know how many Romanian staff there are in this hotel. So you need to hang around Lena because you get the best service because the Romanian staff are all over her. But she has an even greater following in the impact world. Lena has been in this space for a very long time. She is known as an innovation pioneer. She works very closely with the Nexus Global Group. And she also has a lot of early stage commercialization commercialization expertise. So Lena, can you tell us a little bit about how you would define impact and what you would see a framework for us to work with on impact?
Sure. So I'll talk about the terminology a little bit. Thank you for having me on this panel. It's a delight to be here. There's a lot of terminology that's used interchangeably, so I thought I would get us all in the same conversation and clarify the terms before we delve into some of the case studies and practice and future trends around impact investing. So impact investing as a term can be used more broadly to refer to any investment in any asset class that has impact in mind. Or it can also refer to direct investments or private company investments in startups or growth stage companies, which is what it's most often used as. So just to clarify some of the other terms vis-a-vis the term impact investing, you may have heard the terms SRI, or socially responsible investment, and ESG, or environmental social governance. Both of those terms refer to investments in public companies. The difference between the two is that SRI, or socially responsible investment, is basically driven by a sense of ethics. So negative screens for certain things that you don't want in your portfolio could be guns, could be tobacco, etc. Or positive screens for the kinds of investments that appeal from an ethics perspective. The difference between SRI and ESG then is that ESG looks at risk and return and includes a broader set of consideration, environmental, social, and governance considerations, in making an economic investment decision. So hopefully that helps clarify some of the terminology before we get started. And in terms of where the space has evolved, just a quick overview. I do a lot of work with family offices, and so family offices are at the forefront of impact investing. They're really leading the charge in many ways. Family offices and ultra-high net worth individuals. So the trajectory there has been from meeting random startups and and believing in their mission and investing in one-offs. So that was the 1.0, right? And then we've moved to a realization that having metrics or accountability for outcomes, for the impact outcomes that you're investing for, and also having knowledge around a particular sector that the family may be really interested in. So that could be education, it could be poverty, it could be climate change, et cetera. So that's been the 2.0. The transition right now is to a 3.0 approach, which is a theory of change approach. And that comes from a systems view and a recognition that all of these issues are interconnected, and that it is impossible to solve one without looking at the broader systems level landscape. And so I'll leave it at that, and I think Julie will. You're welcome.
Yeah. Yes, Julie brings a very international perspective to this. As Chief Executive of the TBLI, Triple Bottom Line Investment Group, I have attended quite a few, actually, of your events around the world. She comes from a traditional capital markets background, and she was head of global capital markets at NASDAQ. And she sits on a number of endowment committees. Mm-hmm. So coming from a very traditional perspective, would you agree with that definition, and how are you seeing that applied globally? Because it's so easy for us to be US-centric.
Correct. Yes.
How where are things happening around the world?
Great. And also, thank you so very much for having me here, AREDAY. Really appreciate it. I wanted to talk just a little bit about the money, put some numbers around some of these categories, as well as geography and category. And given the very short time we have, I'm going to talk fast. If you take a look at the Global Sustainable Investment Review, GSIA, which actually catalogs sustainable investable assets, that includes impact investments. Over the last 2 years, it's identifying $30 trillion of assets globally, up 34%, dedicated to sustainability. The biggest gains have been coming from Japan, Canada, Australia, which are in the 40s and 50% increases. The United States, 37% increase. In Europe, 17% increase. The biggest markets proportionally of sustainable assets to managed assets happen to be in Europe and Canada, with about 50% being identified. But the biggest opportunities for growth are in the United States and in Asia. So the US, I don't know if anybody knows this, but we control about 50% of the global investable assets in the world. Only 25% of US investments are cataloged and identified as sustainable. So those are just some of the numbers around it. I do agree with we call it the alphabet soup of impact, sustainability, CRI, socially responsible investment, corporate responsible investment, et cetera. But I do want to talk a little bit about the categories as well. Of the $30 trillion, the most money is dedicated to exclusionary screening and also ESG integration. As a matter of fact, most of that $30 trillion is spent in those two buckets right now. So you see that we are still at 1.0, 2.0 in terms of evolution. The smallest categories are impact investing, and then also sustainable theme investing, which is less than $2 billion of all of this measured assets, and it's really closer to 1.5 billion. It's mostly in the public markets, as you can imagine, from the ESG, 51% in public equities, 36% in fixed income, the balance being in either real assets, property, private equity, VC. It's being driven by the foundations and the endowments who have been leading the charge for 5 years running. And we did want to point just one specific slide. Obviously, these are the SDG goals here. But if I can just point to one slide here, it's difficult to read, but you can see it's a somewhat of a, oh, wait a minute, can we get the slide up? Okay, great. Okay, so if you see the slide, if anybody is familiar with the Tonic organization, they've got T100, which is about 140 different investors who are focused on putting at least 100% of their assets dedicated to impact. $6 billion total of investable assets. They've got about $2.8 billion deployed in these types of buckets: community development, transition from fossil fuel to clean energy, green building, affordable housing. Those are the big buckets at the bottom of the chart here. If you take a look at the upper right chart, the smallest buckets are in food, water, agriculture, gender issues, those types of things. So again, this might just give people a little bit of a snapshot and a visual of where this money is being invested right now. So impact investing is real. It's just being deployed very slowly. However, I don't believe that any one of us, as we've had private discussions, think that the dollar is either adequately or properly measured. We think it's way below, the numbers are actually not being measured, and they're way above this 30 trillion, because we all have examples of traditional and non-traditional capital being invested. I'll stop there.
Yeah, I absolutely agree with that. I mean, if you look at the increase in membership of UNPRI, UN Global Compact, you go anywhere on corporate boards, there's so much change happening. And it's also quite interesting looking at this chart, which is still pretty fragmented. And of course, that's part of a transition process where everybody's going for their favorite thing and for all sorts of reasons, right? It doesn't always. It's not. Some have a very clear altruistic reason, which is investing for impact. Others are investing with impact. So it's a very different scenario. But it is shaping up, and in a way doesn't really matter as long as we can actually hold the framework of the SDGs and the climate and the Paris goals as our real objective, and what it is we have to impact. I almost feel let's not get too hung up on all these definitions and acronyms and all the rest of it. Let's just flippin' well do it, because we haven't got the time. So somebody who has been doing it for a long time and continues to do it is Rachel Payne. Rachel is a tech entrepreneur, and she was in at the ground floor at Google. Pretty impactful organization one way and another. She's an impact investor. She's a philanthropist. She was a former candidate for the US Congress, so she's seen a whole lot of the political side of things, and she teaches at UC Berkeley. So, Rachel, where do you see the gaps being, and how, with all these threads that you bring together, where do you see we need to move to?
When I started my career in impact investing, it was 2005, still relatively early in the field. I joined Google as the founder, as first hire on the founding team of what became Google.org. And I had the opportunity to pitch the board of directors at Google to commit 1% of employee time, 1% of equity, and 1% of profits towards doing good in the world. And I had an opportunity to create the first blueprint for a corporate hybrid philanthropic and investment fund, at the time valued at $1 billion. Our pillars were focused on poverty alleviation and climate change. At the time, we were trying to catalyze new technology that could revolutionize core industries that could affect climate change. So we were early investors in plug-in hybrid vehicles. We also invested in policy and trying to shift the dialogue so that we would have a policy framework nationally that would enable proper investment and incentives. Well, if you fast forward today, policy is not necessarily the best path. We're still trying. That's why I ran for Congress. I really wanted to do something on the policy front, but what I realized in that experience were really two things. One, it takes an ecosystem of partnership in order to do any of these things effectively. And I had an experience later in my career, which I'll come back to, that really reinforced that. Second, this is about using the capabilities that you have. It is about funding, and there isn't enough of it. But when you're a corporate philanthropy, or even a corporation, you have unique capabilities, you have a unique footprint, and you have scale that you can apply to the problem at the right level. And that means really solving for the solution in a meaningful way, using the strategic advantage that you have in the market. When I later joined the board of BRAC, B-R-A-C, which is the world's largest NGO and rated #1 in the world, I began to really understand how important scale is in addressing some of these seemingly intractable issues. BRAC is focused on poverty alleviation. I had a lot of experience working in microfinance in the field, and they generate about $1 billion a year that then get cross-subsidizes other areas like education, water and sanitation, and they're really operating at utility scale so that they can affect the lives of hundreds of millions of people globally. This really highlights to me the importance of accelerating and scaling the funding that's going into these areas. We don't have time to talk about the feel-good philanthropy. We don't have time to talk about investing 5% of our endowment in impact causes. We have to really blow this out and say, what are all the resources that we have at our disposal, and how do we channel that in a strategic manner where we have a unique advantage, and how do we do that in partnership? And only then can you achieve systemic change.
Yep, absolutely. And it's not only systemic change. I mean, this is something that speaks to a deep passion of mine, and that is we have to be strategic and systemic. And I would say that we need to perhaps change the focus from investing in projects into investing in process. And that's something we can learn from the corporate world and the business world, where you would never, or hopefully never, start a new division without really thinking through the process and how it integrates. And I feel that too often we aren't really doing that well enough. And investment in process is seen as a sunk cost, and it's very hard for investors or NGOs or philanthropists or foundations to say, oh, we'll justify 10% of the investment in process. I would say it's the other way around, the inverse of that. Invest much more in the process, particularly right now, because we need to invest in effective collaborations, but we also need to invest in strategic collaborations, because we could still miss this mark if we don't see things like, and value things like, for instance, the Arctic and the Antarctic, which is very hard to invest in a traditional impact model. But the cost of not working in that space on the rest of the investment is huge. So, pricing externalities, how do we value things, I think is probably what it'll take us to sort of, if we get there, we'll be at sort of 5.0 or 6.0.
To your point, I think it's really important that we get out of the way in terms of using metrics to limit our approach. Like you said, investing in the Arctic, it's complicated, and you need to have a longer range vision about the value that you can create by making these core investments. As an example, after working in philanthropy at Google for a while, I realized that philanthropy can only do so much. It's a limited tool. Same with impact investing. And what I convinced the board of Google to do again is to invest in the continent of Africa by building an internet infrastructure and helping generate not the last mile, but the core infrastructure that will enable mobile services. And we also mapped the continent of Africa with Google Maps. We trained people to map their own village. We worked with the carriers, and I managed to negotiate with the carriers 0 rating for all people living in extreme poverty zones. And it was a way in which we could help accelerate what would become an internet economy, a mobile economy, and provide that barrier, address the barrier to access that so often limits people's economic opportunity. The value that we created, I don't know how to measure that. Everyone uses maps, excellent. People use their phones, and we helped accelerate that tremendously, great. But that wasn't the driver. The driver was we knew that building that ecosystem, working in partnership, and working at the level of scale that was required would have tremendous value down the road. And it didn't have to do with immediate profit. And sure, more people online means Google will benefit, great. But the truth here is that there are players in the market who have the ability to make infrastructure, utility scale type investments that can really move the needle. And even if you don't have the metrics right now to understand what that value is, trust that when you're helping to enable that ecosystem to thrive, the value will far surpass whatever you think is possible.
And if I can just jump in on that, what we're talking about is the evolution of investment and investment activity. At TBLI, we work with pension plans, we work with asset managers, we work with family offices, people of scale who are looking to onboard strategies or looking to invest in direct opportunities. but they no longer want to just be pitched one particular technology stock or one particular aspect of impact or sustainability right now. They want to understand scalability in terms of how do I make systemic change and how can I pull in partnerships to change ecosystems. And that to me is one of the reasons why we've had a lot of talk about impact and sustainable investment and not a lot of deployment of capital. People are trying to figure this issue out. And even within the stock exchanges, there is just a conglomerate of 92 different stock exchanges, the Sustainable Stock Exchange Initiative, who are looking to work with their corporate partners and their corporate listings to make this type of evolution. And I believe that it's going to take not just one particular corporation, not just one country. It's going to take the partnership of private, government, and the social sector to make these systemic changes.
To build on this question of what is worth doing from a strategic systems perspective, I'd like to offer a case study. And what does it look like to have a theory of change when you're building, let's say, a thesis for an impact investing fund? I've launched 5 organizations in the impact space, and I like to, on a regular basis, ask that question, what is worth doing in the world right now, given what we know to be true? And how do we translate that into appropriate action in the appropriate time frame? And so most recently, last year, I asked that question, if I were to start an impact investing fund, what would it be? What would it solve for? What role would it play from a macroeconomic perspective in terms of all of the issues that have been discussed yesterday and today here, from oceans to climate change to the divest conversation earlier today, and what do we invest in as part of the invest-divest equation? And so in looking at what are the key priorities from the perspective of the agreements that we have as a global community around what a shared future will look like, the Paris Agreement, the UN SDGs, how do we translate that into useful action through the process of deploying capital? And so I spent 12 years working on climate change, launched the first biomimetic technology incubator, focused on energy, material science, and water. And one of the elements that I felt has been not addressed sufficiently in terms of the petroleum end of the equation, there's much conversation here and many other places about the energy side and the transportation side. However, petroleum is used in thousands of industries that we currently don't have alternatives for. And so if a grounded invest-divest conversation is to happen, we have to invest in alternatives to enable full divestment and moving away from using petroleum. So things that most people don't think about, like industrial lubricants that go into our water table and rivers, et cetera, and many, many other products that petroleum is used for. And then the other aspect that, from my understanding and work in the space for the last 12 years, toxic chemicals. Very urgent threat. Endocrine disruptors have been discussed to some degree earlier today. This question of how do we counterbalance what the scientists are telling us, which is that by 2060, the human race will be unable to reproduce due to the toxic chemicals and in particular endocrine disruptors in our environment. How do we reduce the body burden of those toxic chemicals? So all of these different elements, how does that translate into a thesis for an impact investing fund? So where we landed is 3 priorities. The first one is alternatives to petroleum-based products. So enabling getting off petroleum in all of the applications that currently don't have other options. The second is alternatives to toxic chemicals, in particular endocrine disruptors and the dirty dozen, which are the 12 chemicals that most impact human health. And the third is film and media that can accelerate the deployment of technologies in the first two categories. What I've seen working for 12 years in early stage commercialization is that without that culture shift piece, the technology adoption curve is too slow for what we need currently. So if we look at an example like solar, it took us 40 years for global deployment. We don't have 40 years around some of these issues. So that's why the emphasis on a five-pronged approach on the film and media side, we feel is really a critical complement to the early stage technology commercialization.
And I would
So
like
just,
to, sorry.
and that's just one example, and that example is specific to an impact investing fund. You can take the same theory of change and apply it then across asset classes. So for example, in your public markets, you may want to short Monsanto Bayer if your theory of change includes accelerating the demise of certain toxic chemicals from our production and manufacturing system. Or you can look at muni bonds and other asset classes and apply the same theory of change.
And I believe that the next wave of impact investing, when we look at the 3.0 and the 4.0, the next stage is around enabling broad-based participation so that any player, any person who has something that they can give has a place within that ecosystem where they can connect. And as an example of this, today I'm announcing the launch of the Tree Pledge. And the Tree Pledge, go to treepledge.com, join the pledge, and it's a way where we can enable everyone, whether you're a corporate CEO, whether you're a philanthropist, or you're in school and you want to plant a tree in your school, anybody can take action because everyone has a gift to give. And the issue of climate change is alienating and it's distant. And people need to know that there's something that they can do that makes them feel like they're doing something important, measurable, tangible, and meaningful. And we're starting with local communities. So we're working with cities and counties. We're launching it first in Southern California because we need trees. And we're working with the County of LA. We're working with various cities all the way down from LA to Orange County to San Diego. We're working with NGOs and schools. And we're looking for corporate sponsors who can commit not just corporate contributions, but employee time. Because when I ran employee programs, people loved planting trees. And if you could commit your company to taking the Tree Pledge and making a commitment to restore trees in our country, starting in the US, because we have a lot to prove here, then we can create an example that inspires. Look at what Ethiopia did, 350 million trees in 12 hours. We could do that. We could do that and more. And so we're committing to helping empower local communities to take action to plant 1 trillion trees. So please join the Tree Pledge, and it takes all of us. I know there's a lot of trees happening right now today, and thank you, Tremel, for pre-announcing this. So the Tree Pledge is really important, and everyone has a gift, so join it. Thank you. TheTreePledge.com.
Yeah. And I mean, just to your point about inclusion, I think it's really, really important. So much of this financial space has been exclusionary, really. It's been sort of seen as the province of the professionals, or else there's been crowdsourcing and crowdfunding, which has not always been entirely successful. But we're moving into the next phase. So you're getting platforms like ICSO, where you're getting the impact is actually being shown on a platform, and you can invest in impact, which I think is really, really interesting. And then you can start aggregating that impact in different sectors. So, I think this is where technology starts really kicking in and helping us. And in a funny way, maybe we're in a perfect space because all of these things are coming together right now, right here. And the will is there as well. And the momentum is unstoppable. So I'm going to give the last word to Julie because we have 15 seconds.
Terrific. In 15 seconds, all I would implore to the audience, if you are looking at different funds, if you are raising funds, if you are looking for money in a direct investment, what I have noticed at TBLI is that there is an evolution also of the investors becoming much more sophisticated in this space. They're requiring more information from a fiduciary perspective. So just be ready and think about that responsibility that you have taking on investor money. So.
And I'm going to make one more point, and that is take individual responsibility for your financial activism. ask whether your 401 is actually delivering what you want it to do. And keep putting the pressure on, because that's how things change. So thank you to my panel.
you.
Thank you all for
Thank you,
listening,
Inga.
and I'm sure lunch.